Thank you for visiting this channel. A quick disclaimer before we move ahead. This channel does not provide any recommendation on in buying or selling anything. The videos are solely for the educational purpose. Before taking any trading decision, do consult your financial advisor. I'll quickly try and run through what happened at TASI during the week. Week was kind of choppy, and there were mild trades available, but I would say not worth trading. Funda is clear unless you have got a clean shot. Avoid trading because it will unnecessarily would mean that you would end up paying money to your broker, and you'll keep churning your money. So here the point here, as we have seen that market was way too overextended. If you can see the value of RSI over here, you see it was hitting about 15 level near on 9th March, and it market needed a bounce so that the scope can be given for, probably I would say, for the fall. So basically, if you see it in technically, what you would see that you had divergence between this point, which closed at 6315, this point which closed at 5959, and then you closed at 5990. So you had divergence between these 3 points, which essentially pushed the market high. Now if this market would have had potential and would have had strength, these 3 points were more than capable of showing you a mega move, but which did not happen, which primarily shows that there is an inherent weakness in market. I mean, this is needless to say because that is what you're noticing across the globe. Now the point here is that there is no reason to be very keen at trading these levels, because end of the day it would eventually would not mean anything. It will not gain much. It will not create much of profit, risk adjusted profit for you. So the clear cut answer to the question is that if somebody is asking whether this was tradable, I would say no, it was not tradable, because it was way too extended to the downside and needed a correction, and then you're noticing a correction. I would expect correction to be a bit healthy so that scope can create more. So I would expect oscillator to come somewhere near this level, around 60 level, with price hitting say 6,900, 6,800, 6,900, so that it starts hitting these levels wherein these moving averages starts acting as resistance. For those who love swing failures, you can clearly see that on the daily chart you have got a clear cut swing failures, multiple swing failures, giving you ample chances of entering into the trade. However, what happens? There are 3 things that we got to keep in mind while taking or not taking a trade. First of all, you got to see whether there is a setup worth trading. If we go by the conventional technical analysis, we find that this is a kind of double bottom with the markets fully extended to the downside, and yes, this is a pattern available worth trading. So one leg is taken care of. The second leg is whether you had enough volatility whether you had enough expected volatility into the market. And I can bet with you that while you will see patterns coming very easily to your side, you'll have equally hard time while determining the direction of momentum and volatility in general. Somebody may say that momentum is going to align to the upside over here, and I would agree with him or her, and then you enter into a trade at this level probably, or this level. So here you closed at 5959, and then you hit 6326. You can calculate yourself how much are you able to gain, provided you did not get scared to come out of the market with this candle in place. So anyways, so there are 3 things that would be needed in order to initiate or not initiate a trade. And again, my funda is very clear, as I had mentioned last time. Again, it is same. You will not get more than 4 to 5 trading opportunity worth trading in 1 year, and you do not need to run behind all the setups. Otherwise, you will keep churning your money. Now, so basically, now what happens is that you had bullish divergence between 6315, you had bullish divergence between 5959, and then you had bullish divergence between 5990. So essentially, you had bullish divergence between these 2 points and these 2 points, and market kind of give you some good gains, which is basically part of correction. But as I have mentioned to you, I would be expecting market to go to this level, where you'll be getting a clean short, perhaps to trade for larger gain to the short side. Now I will I'm not going to demonstrate the volatility over here right now, but we'll go and explore on the shorter time frames, and we'll try and see whether there was a possible move available worth trading. So I'm going to the hourly chart, and you can see over here that theoretically, though the trade existed, because of the back-to-back divergences that you're finding, practically you'll find that you had all the gap downs. So we discussed about 9th March. So your divergence started right from here, and second divergence was so between 9th and 16th. I have shown you one divergence, so this is the point. Okay, and then probably you try, and 16th and 23rd you had another divergence. So somewhere here you had on a daily scale you closed at 5959, which is right here, this candle, and then on 23rd you closed at 5990, probably this candle. Yes, probably this candle. So you can clearly see here that there was no trade as such that existed. There was no trade as such which existed. Of course, you had volatility declining in this zone. You had volatility declining in this zone. So basically, what happens is that you enter with a thought that market is going to fly because of the bullish divergences. But you'll have to bear in mind that we are in deep bearish market, and unless there is some strong so basically what question you have to answer is, and I do take trades on the basis of divergences, and there are lot many reasons for initiating those trades. But the question is whether you should be trading just for the sake of trading, or you should trade with some reasons to trade. If you fall on the other side, wherein you try to enter into the market for a reason, then the point is that you should be looking at momentum falling on your side, volatility, and whether there is scope in market or not. So there is no point. I'm sure that if you were not able to enter market over here, I can assure you that you'll not be able to short this market at this point, because well, theoretically you can say that yes, this was a clean short all this while, but practically how many of us have got so much of patience to stay in the market and sitting on the kind of profit that probably you have never seen. I spoke to some of my friends, and I understand that in Saudi, like TASI, options is not available, which is another way of trading the volatility. because in stocks you do not generally experience volatility the way it should have been. So for example, in some of the extremely volatile instrument, you'll find that from this level to this level, if in stock you make say about from 7928 to 75, so in absolute terms you make, let me do this calculation, 7914 minus 7558, so you make about 4.49%, about 4.5%. But if you trade some of the volatile instruments through option route, you'll find that your money would have appreciated by probably say 50% or more. And luckily, if you get hold of this move on the day of expiry of the particular option, you get wild moves. So my point is that unless you get three things aligned your side, avoid trading. So it would be primarily momentum, volatility, and scope. So the first one is momentum, the second one is volatility, and third one is scope. If either of these three are not available, it is better to step aside and do not trade the market. So, but there are various ways and means of trading the market when volatility is missing, and that is the time you think of shorting that particular option. But that would be a little bit of too much for this video. But in order to answer this question of looking for a move when this market will be worth shorting, let's go to 4-hour time frame as well. Let's see what is happening over there. So you can see that all these time frames are all correlated. There's nothing working in isolation. All the time frames are correlated, and it totally depends upon the fact that from which time frame a move has been initiated. So a trigger that you get on a weekly chart is going to probably last for longer, for significant amount of time. I would say you'll get at least 2 to 3 weeks worth trading, and then long consolidation. You always remember that consolidation, people say that market is consolidating 70% time, and that is the time when you should not trade. There are two ways to interpret this. One is that market is giving you an opportunity to assess in which side that consolidation is going to break. Well, speaking about it is very easy to execute in the marketplace, which I'm fully aware of. But there are many ways of making use of that opportunity. So the most important thing is that whether you know on which time frame market is consolidating, because when you see the mega breaks that are taking place, you generally find that it market fires from all the time frames. Whereas if you see market firing from only one time frame or two time frames, you are not going to see that particular move lasting for very long. So now I have seen this is the 4-hour chart. So this is the 4-hour chart. As you can see that there is no move at all to the upside, especially. And if you enter into the market, you keep churning your own money, and you're unable to get hold of something which is substantial. So the point is, let the market hit this zone and see if market starts consolidating somewhere near this level, and gives you the reason to enter into the trade. As you can see right now, RSI was oversold, and that is why it is firing up. I mean, it can I'm referring to RSI because I am kind of hold better control on RSI than others. I've tried others also, but RSI I find magical and tells me a lot of things. So So here you can see that RSI hit the level of how much it is, 15, which is way too low. So the point is that it is not going to go to the level of 0. Of course, there are times when I've seen RSI hitting to level to the very low levels, not 0, but yes, of course, very low levels. But those are not, again, worth. Those are the times when you will have to have very high courage in order to short the market or remain short with whatever holdings you have. So here the point is that I just wanted to establish that there was no trade on this bounce off the low that we have noticed, and what I would be expecting is that market should go and consolidate it to this level, and that is when you'll see that here you'll have probably kind of consolidation, and post that consolidation you should see zero line reject from this, and that should be bringing the market down. Though I mean, that is purely speculation. I avoid doing that unless I have got enough reasons. I will not be able to speak much on it. So yeah, so we'll wait and watch, and I hope market is bouncing off the lows, but unable to reach to say 8,000 level, which is, anyways, I mean, 8,000 level for now is extremely difficult. If market hits to this level of 7313, starts consolidating over here, and then forms a bearish divergence with some weakness in MACD on one of the lower time frame, and probably a zero line reject on probably one of the lower time frames, which will not be 5 minute or 10 minute. It will give you enough reasons to take trade to the short side with clear cut defined stop loss. So we will also see 30 minutes time frame. You do not have anything. You can see and you can decide for yourself. If unless you trade this zone with option, you will not be able to make any money out of it. End of the day, you'll keep churning your money. End of the day, you'll keep paying to your broker. And again, let's go to some other time frames also. We'll go to say 45 minutes. There is no trade. Where will you enter? Here you do have bullish divergence, but where will you enter? So the main direction is down, and we'll be looking. The only way to trade the market will be to wait for a clear-cut short signal, and if it is not available, stay away from market. Again, momentum, volatility, and scope. If these three do not exist, it is very good to stay in cash and avoid trading that particular market. Net is probably slow, but apart from these indexes, there are few more that I do follow, and there are few I follow very very closely. And again, in order to make money, or create wealth, you do not need to trade every day. Market will give you ample opportunity, but it will not be say every hour or every week. Probably you'll have an opportunity coming your way. You'll have to have the patience to wait for it, and once it comes to you, then you must have cash available with you. It should not happen that you have wasted your cash while trading the sideways market and scaling in, scaling out, scaling in, scaling out, and paying your money to the broker, and losing your money till an extent that when the move comes, you become an economist. So your transition is straight away from a trader to economist. So that should not happen. So wait for momentum, volatility, and scope to come into your favor, and then you'll have you can make your fortune out of it. So thank you very much. Thank you for giving me your precious time. I'll see if something unfolds during the if something unfolds and I get some time to work on it, because making these videos, it takes hell of a lot of time. I could not post anything on crude oil last week. I was extremely tied up. I could not focus on that as well. But in order to trade successfully, you'll have to make probably a list of 4, 5, 6 instruments that where you'll be getting some other opportunities. So for example, if I say that you'll be getting say 4 to 5 opportunities in one instrument, you have non linked instruments, 4, 5 of those, and keep a track. Keep a track. I would prefer that you follow some of the instruments in which you have got you do have good underlying instrument with strong liquidity and volume, but also you take care of get hold of some of the highly liquid other instruments which may make sense to you. I will not name any of those. You may do your own research and you may create a list, so that you get probably say if you get 5 on one, you get 5 into 5. If you're tracking 5 instruments, so you get 25 signals per year if you want to trade. So thank you very much, and I'll speak to you guys soon. Thank you.